let's take a look at some basic financial statements. The first one that we really want to understand is an income statement. So an income statement summarizes a company's revenue, expenses, and profits or losses over a specific period of time. Some companies review this quarterly, some companies review this by fiscal year. Regardless of the cadence, it does provide insight into a company's operational performance and profitability. One of the first lines reviewed in an income statement is typically the revenue or the sales. It's the total amount of money earned from selling goods or services during a period. Once the revenue is understood, we move on to the cost of goods sold, or the COGS. It's the direct cost of producing the goods or services sold, which is typically inclusive of materials or the labor. Once you understand both the revenue and the COGS, then you're able to identify the gross profit. See, this is the difference between the revenue and the COGS, making it a very simple formula of revenue minus COGS, which will give you your gross profit. This indicates the profitability of core business operations. These core business operations has its own expenses, which we call the operating expenses. This is the cost of running the business outside of the COGS, such as your rent, your utilities, your marketing, and your salaries. These expenses are 100% necessary for your daily operations, but they don't directly relate to the production. We're still going to keep our gross profits in mind, because once we subtract our gross profits from our operating expenses, we're able to identify the operating income. The operating income reflects a company's profitability from core operations instead of core business functions, which is different from business operations. An income statement also identifies other income and expenses, which is non-operating items such as interest incomes, interest expenses, or gains and losses from other asset sales. And if you're figuring out the pattern, that's right, we are going to include this in our next formula, which identifies our net income. Your net income is the operating income plus your other income minus your operating expenses minus your taxes. The bottom line of the income statement is the net income, which shows the total profit or loss after deducting all expenses, including taxes. It's pretty easy to identify why finance is so important, and finance is very organized and manages the balance sheet, which provides a snapshot of the company's financial position at a specific point in time.